A well-executed strategy will allow to own the customer. You don't own the actual interaction with the customer. You have enough data to track and serve the customer across the different touch points. Product manufacturers that either have unique expertise in a specific niche market, niche product, or they have unique automated digital underwriting and servicing capabilities coupled with good APIs could execute this strategy, which essentially means offering their product or service through any digital channel that can consume this API and offer it to their customers. Let's think of O2 or Vodafone. They could consume an API of a vendor that offers cross-border payments through the app. Okay? So as much as I'm concerned, as a customer, as an end customer, I'm using the O2 or Vodafone app, but the service won't be provided by O2. It will be provided by the same vendor that is actually providing the same service to the flight companies and so on. If you follow the number of articles, blogs, podcasts that follow the announcement of the launch of Apple Card, I've seen probably over 100, and I'm sure that I've seen a fraction. So I think that many people in the industry are trying to get to the bottom of it. My personal view is that GAFAs need to control and need to own payments. Why? Because they need the payment data. That's the fuel that they use to run their business. And once you control payments, so then you can control other financial services. So it's a retention and customer ownership exercise. If we look at Facebook and their massive investment in blockchain and payments and the payment license they receive, they want to control and own payments, period. Okay? Same for Amazon and same for Google. As for Goldman Sachs, I think it's a very, very nice and good example of how they build their technology capabilities, build API, build an automated underwriting process that will allow them to plug this product into Apple Pay and the app. And as for Mastercard, it's just another interesting channel. I wouldn't be surprised if Goldman Sachs have some sort of exclusivity, even if time limited. And I think that that's a good opportunity for those incumbent banks that already have the APIs and underpinning engines to negotiate with GAFAs. Banks will need to develop new business development and affiliates and network and other similar deal flow generation capabilities that will allow them to spread and plug their APIs into as many different channels and touch points with the customers as possible. If we think of EasyBob and iWalker as two good examples of automated unsecured lending for SMEs, an application process that will take a few minutes and an underwriting process that will take between seconds to minutes in most cases. If we think of Esme as an RBS business that was built on top of EasyBob platform and offers access to unsecured credit up to, as I recall, £150,000. And if you're okay, you can have the money in your account within half an hour. A good example of how such a strong and new automated service can serve an unmet need. Now, if we take one of the incumbent banks and plug those EasyBob or iWalker or similar propositions like OnDeck or Cabbage in the US engines into their systems, and then on top of that, the right APIs, so that could be a very interesting proposition because then they could lend at a fraction of the cost any other fintech would be able to lend. Reinvention of DNA comes first, way before acquisitions or external growth.